Hey, this is Trader Travis, and in this video, what we're going to do is teach you about stock option valuation, and you're going to learn a little bit about what gives options their profit potential. We're also going to discuss the most dangerous assumption that new traders make when trading options, and then we'll teach you the 6 factors that make up an option's price structure. Now, stock option valuation, which is also known as options pricing, is probably one of the least understood part of options trading. And, one of the most dangerous assumptions that I see new traders make is, they engage in option trading and they assume that the stock's price movement is the only factor as to whether they make or lose money. And this is a dangerous assumption because a stock option's price, it doesn't always move in conjunction with the price of the stock, And so there are other factors involved. And as a matter of fact, there are 6 factors that control the price and profit potential of options. Now, we're going to begin with one of the 6 in this video, and then the subsequent videos that are going to follow, we're going to cover the remaining factors. Now, I will forewarn you, the material in this video is going to only make sense if you've gone through the first 5 lessons of our option basic course. It's completely free to go through the course, and if you want to review those lessons, just go on over to our website, learnstockoptionstrading.com, and then click on the Module 1 tab. And so I'm going to continue on with the assumption that you've reviewed those lessons, and if you haven't, go ahead and feel free to click on the link below, or just head on over to the website. Okay, so now let's go ahead and cover the 6 factors that make up an option's price. You have the current market price of the stock, you have the strike price of the option, you have the remaining life of the option, you have volatility, you have interest rates, and you have stock dividends. Now, interest rates and stock dividends are beyond the scope of this lesson, so we're only going to be focusing on the first 4 in this series. So let's go ahead and start with the current market price of the stock. Now, with all things being equal, if a stock goes up in value, then a call option will go up in value and a put option will go down in value. All right. Now, calls and puts, they essentially operate opposite of each other as far as their price movement. For instance, all things being equal, let's look at the opposite. If a stock goes down in value, well, a put option will increase in value and a call option will decrease in value. All right, so let me show you an option chain real quick, just so you can get a visual representation of what this is. Now, currently, right now, I have Starbucks stock pulled up. It's trading at $47.90. Okay, so let's look at this call option right here, a September 47 call option, which gives us the right to buy Starbucks stock at $47 a share. So if the stock goes up, a call option value will increase. Now, why is that? Well, if Starbucks goes up in price to $50, that contract right there still gives us the right to buy Starbucks at $47. So it gives us a $3 discount. And so that contract is going to hold some value to somebody because you get to buy the stock at a significant discount than what it's currently trading at. And again, the opposite is true for put options. If the stock goes up in value, a put option will go down in value because put options are opposite. They give you the right to sell something. And so, in the open market, if Starbucks is trading at $50, and if you sold it, you get $50 a share. Well, if you own this put option contract right here, there's $47, that gives you the right to sell Starbucks at $47. So why would anybody in their right mind try to sell something for $47 when they can go out to the open market and sell it for $50? All right, so that's just kind of a visual representation of how that works. And again, that's only one of the 6 factors. And in my opinion, when you're trading options, probably the 2 most important factors you focus on are time to expiration and the strike price. And I say that is because there are only 2 you really have any control over. We're going to discuss that a little bit more later in later videos, but, just keep that in mind for now. And so, I hope by now you're beginning to see that why making money with options is viewed as risky is because there's so many individual components and things to think about. And most new traders have no clue that options pricing is such a multi-layered and often complex subject. And I'm reminded of an email I received from one of my students, and he was sending us an email. Is one of the students we mentored, and pretty much he was saying that, hey, I'm going out on my own. I'm spreading my wings here. And he said, hey, I've been with you all for almost 2 years, and I learned so much, everything from the basics to more advanced methods. More importantly, the proper mindset and how one must be diligent each step of the way. Now, this is a key part right here. He said, it's easy to see why so many beginning traders fail. They just don't know how many ways you can trip up. It is what they don't know that kills them. Okay. And so pretty much he was discontinuing discontinuing his membership in our coaching program. He said, hey, I want to free up my spot for someone else. And that allows us to take on another student that we can mentor. And so when I got his email, I said, he's so right. I was lucky because, I was mentored by a trader, a full-time trader. And so he taught me all the ins and outs. He taught me all the things that he had learned over his 20 years of trading. And so if you're also interested in learning all you can about option trading, and possibly even being mentored by a professional trader, then we'd love to help. We want to help you move one step closer to your ultimate financial liberation. And so there are two ways to stay in our educational loop. That's either subscribe to our YouTube channel or click on the link below. And so if you'd like us to help you learn more, then just subscribe to our YouTube channel or click on the link below. And so you take care, and I'll talk to you soon. Bye.